One of the learning goals in workshop 2 is for us to understand recording transactions. We record transactions in accounting by writing journal entries using the accounting equation. When we write these journal entries using debits and credits, the accounting equation must always balance. So what are these debits and credits? We can use the mnemonic DEAD, D-E-A-D, for items that are normally debit items, and the mnemonic LIE, L-I-E, for items that are normally credit items. The accounting equation is assets equals liabilities plus equity. Assets normally are recorded on the debit side, on the left side. Liabilities are normally recorded on the credit side. Equity are normally recorded on the credit side or the right side. When we say normally, when we add onto that normal side, we increase that amount. For example, assets, if we normally record on the debit side, assets increase. Liabilities and equity, when we normally record on the credit side, on the right side, those liabilities and equity increase. And here's that expanded equation, expanding the equity. Again, the capital is normally recorded on the credit side. Withdrawals or drawings normally recorded on the debit side. Revenue and expenses are also part of equity. Revenue is normally recorded on the credit side, and expenses are normally recorded on the debit side. So these amounts in transactions are recorded in 2 or more accounts. These items have various accounts, and when we record transactions, we record in 2 places or in more than 2 places. But when we record it, our debits, the total debits, must equal to total credits, and the accounting equation balances. Here are examples of asset accounts. Asset category, there are various names where we record information. Here are some examples: cash, receivables, prepayments, land, building, equipment, supplies are examples. And here are examples of liability category, account names under liability category. Payables, unearned revenue, accrued liabilities are account names under liability category. And here are account names under equity category. Owner's capital, dividends, drawings, revenue, expenses, those are account names under the equity category. So how do we decide whether to record a transaction or not? Let's look at these steps. The first is we look at an event, and then we ask the question, is this measurable in money terms? Can we measure that event in money terms? If it is, then we ask the question, does this event directly impact on the organization, increasing or decreasing money in the organization? If it does, then we must record that as an accounting transaction in the organization. So how do we know what is debit and what is credit? We know that there's a debit and a credit, or there's more than one debit or more than one credit, or there are debits and credits. How do you know what is debit and what is credit? We ask the question, what did the company receive or will receive? The company receives a product to keep or right for service for more than a year. We record that under the asset category. It's a debit. Anything that company receives or will receive are debits. Now that we have decided they are debits, now let's identify the category under which we need to record it. So if it is a product that was received or right for service that was received and we are going to keep it, organization is going to keep it for more than a year, that's an asset category. We receive a product or service, but we are going to keep less than a year, we are going to use it up, then it is an expense. If we receive cash in the future, then we record it as receivable. The second is, what did the owners receive or will receive? If owners receive or will receive something, we record that as a debit. Paying dividends, owners making drawings, we record them as debits. So, two items here. What did the company receive or will receive? That becomes a debit. What did the owners receive or will receive? That becomes a debit. Let's look at the credits. What did the company give or will give to outside other than owners? That becomes a credit. Examples are, we give a product or service that is called earning revenue or income or sale. That is a credit. We give cash now. We record that as a credit, cash. We give cash in the future to some other party. That is called payables. We record it as a credit. Secondly, what did the owners give or will give the organization? If the owners gave some money and the company gave a share certificate, they're called share capital, we record it as credits. So for credits, there are two items. What did the company give or will give? They're credits. What did the owners give or will give? They are credits. So the debits and credits. Let's look at an example, how we record this. Say ABC company, they bought a refrigerator on account. That means they have not paid the supply, bought on credit for $2,000. On 1st of February, they sold the refrigerator on account, sold it to a customer but have not received money for $2,500. So let's look at how we record it. What did the company receive? They received a refrigerator. They received an asset. And that asset that we have received is called inventory. That is the account name, because that asset is being received to be sold out. That is called inventory. But we have not paid the supplier. So will the company pay? Give. In the future, will the company give it? Yes, that is accounts payable, and that's a credit. So debit and a credit. Company received a refrigerator. Company will pay for that refrigerator. Debit and credit. Give and take. Receive and pay. Journal entry 2. Company sold it. They gave the product away. That's revenue. They gave it. Credit. 2,500. Company will receive money. Accounts receivable, not cash. Will receive money. Accounts receivable, 2,500.